Stacy with the Stacy Esser Group. Thanks for joining us. And today I'm here with Steve Grossman. Hi, Steve.
Hey, Stace. Thanks for having me.
Thanks for coming. And
Welcome.
so Steve is a partner in New Jersey Lenders. They have probably 11 offices,
yes.
about 200
Employees.
employees. But you, Steve, are actually ranked in the top 100 out of 500,000 mortgage originators nationally. Is that correct?
Yes.
All right. Well, I'm so glad you're here. And of course, you and I have known each other for a long time.
Very long
And
time.
so not only is Steve a trusted colleague, but he's also a friend. So thanks for coming. Steve is going to talk to us about what a pre-approval is, what a pre-qualification is, and what a credit approval is. And it's interesting because the term credit approval is often not brought up, but it actually is what we should be looking for
100%.
as a seller to bulletproof ourselves the most. And if you are in a competitive bid situation, it is the credit approval that will make you the strongest buyer.
100%.
And can you explain why that is?
Sure. So the first thing is a pre-qualification. So a pre-qualification is a loan officer interviews a client over the phone, runs the credit, and whatever they say, that's what it is. They send out a letter.
So I have a question. So you're saying we get a pre-qualification where I am a listing agent and I have something that says from a bank, this person has been pre-approved for $700,000. And that might actually mean that nothing was checked. No credit.
Credit has to be checked.
Credit has to be
Other than that,
checked.
nothing else is
So,
checked.
okay, so nothing else but a credit has been run
Yes.
at that point, and everything else is just somebody verifying over the phone. Could be.
Verbally conveyed it.
So that's a pre-qualification. So what's number two, pre-approval?
So the next is a pre-approval where credit is ran. The borrower submits his W-2s, pay stubs, tax returns, and bank statements.
So
and
W-2, tax return, bank statements, and that
Credit.
is, and credit.
And it's reviewed and vetted by the loan officer. That's what a pre-approval is.
Okay, so the first was a pre-qual, the pre-approval, but the best is
The credit approval.
the credit approval. Okay, tell us about that.
So credit approval is the borrower submits the bank statements, the tax returns, the W-2s, pay stubs. We run credit, a processor processes a loan, and an underwriter reviews it. So the same process that is done on a live file is done on the credit approval. The only thing that's missing is the appraisal. So if you have a client with a credit approval, it's equal to an all-cash offer.
Have you had people thinking that a credit approval is the same thing as a credit check? Has that come up?
It comes up that the most times it's the credit approval is more similar to a pre-approval, that people think it's one and the same, but it's not, because just because a loan officer could be a great loan officer, that doesn't mean he's an underwriter or she's an underwriter.
Right, so basically what the message here is that if you're looking for your strongest buyer, you're looking for the buyer that has a credit approval, and be very clear that there are strong differences between a pre-qualification, a pre-approval, and a credit approval.
Correct.
Right? And of course, if you're in a bidding war and you're not offering to pay entirely in cash, then the next best thing would be the credit approval.
Correct.
Right? Okay, so for more questions on all that, you have Steve's information right down below. We're gonna